first day I bought stocks was March 12th, 1942. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening and my dad told me the execution price, it was down 2%. If you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably, if you buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own. American Express, we've owned it for 20 years. Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then you're good luck, basically.
Although there are a lot of people who look at the market and they say, look, I want to buy, but I don't want to buy when the market's sitting at new highs, when it's been hitting new records every day. Maybe it's off 800 points this morning, but maybe there's more of a decline to come because the effect of the coronavirus is going to be an impact on the global economy. IMF said that over the weekend. You are going to see weakness as not only China, but other countries try and address this. You're right, it may not change things over the 5 or 10-year span of things, but if I think that I can buy something for potentially 10% cheaper, maybe more than that if I wait a week or a month, maybe that's what I'm sitting around.
Well, if you think that, then you're going to get fabulously rich if you're right. All you have to do is just keep buying at 10-day intervals and keep taking your 10-day prediction. If I knew what the market was going to do, obviously, but you don't. I don't think anybody knows what the market's going to do. I think you do know whether you're making an intelligent purchase at a given price. Everybody, when they buy a stock, if you're going to buy, say, General Motors that has 1,400,000,000 shares out, you should be able to take a yellow pad like you have there, and on one page say, let's say it's selling for 30. It isn't selling that low, but that'd be $42 billion. You should say, I am buying the General Motors company for $42 billion because, and you should get it on a piece of paper. And then if you want to have a separate piece of paper, it says, I think I know what the stock market's going to do, so I know whether it'll be higher or lower. But you don't have that.
But if I worry that the economy is going to slow down, not just for the quarter, but for the year, that would impact how many cars I think they might be able to sell or even produce.
I'll guarantee you cars are going to slow down someday. In 1932, General Motors had 19,000 dealers. That's more than all the auto dealers in the United States today. There were only 125 million people then, but they had 19,000 dealers. They produced or sold, and there was 1 month, I think, when they sold less than 1/10 of a car, right at 1/10 of a car per dealer. That was a terrific time to buy General Motors. And forget about the market. If you can predict the market, you don't need to read balance sheets. You don't need to read anything. You certainly can't predict the market by reading the daily newspaper. That is for sure. And you certainly can't predict the market by listening to me. But you're buying businesses. And if you had planned to buy a local service station yesterday and it was closing day, I don't think you'd tear your hair out or anything like that. You'd have already looked at where it was located and the contract it had with the suppliers and made a decision on competition. People, because they can make decisions every second in stocks, whereas they can't with farms, they think an investment in stocks is different than an investment in a business or an investment in a farm or investment in an apartment house. But it isn't. If you get your money's worth in terms of future earning power over the next 10 or 20 or 30 years, you're going to have made a good investment. And you can't pick them from day to day. If you can do that, you can, well, I haven't met anybody yet that knows how to do it.